Hey, everybody, this is Jeff Cohen with Seller Labs, and I have a special guest on today. His name is Tyler Jeffcoat, and he may look like he's sitting in a familiar place because he's actually in our offices right now. He works for a sister company of our founder, Brandon Checketts, that specializes in Amazon bookkeeping, profitability. I don't know. What's the best way to describe it, Tyler? Maybe like a CFO for your Amazon business?
Yeah, I'd say all of those things. We do outsource bookkeeping, outsource CFO, preparing your brand to sell, that kind of thing. So yeah, we live in the financial side of this business that you guys tackle so many other needs for.
Awesome. And so what I wanted to bring Tyler on to talk about today is about profitability. And many sellers really focus on marketing, promoting, sharing their sales, but they don't always talk about their actual profits. And one of the things that we as sellers really have to do is dig down to, is what we're doing profitable? And it's something we talk about with advertising, reordering products, spending efforts, expanding your team. All of it comes down to profitability. I've been personally working with Tyler for over 6 months now. Prior to working with Tyler, I had just a regular bookkeeper. Nothing wrong with her. She was great, but she was just a bookkeeper. I brought Tyler in because I was looking for somebody to give me a little bit more than just bookkeeping. I wanted bookkeeping with a little bit of like direction. And we were able to uncover a lot of things about my account. We've killed a couple of ASINs because they weren't profitable. We've recovered some cash because it was sitting out there with inventory. We're making better buying decisions because we're looking at the profitability of the product better. Okay, I have 3 questions to get into it today with you. The first question, Tyler, common mistakes, right? So like you take on an account like mine, I've been using a bookkeeper. What are common mistakes that you have to fix that a bookkeeper who's not looking at it in like a CFO type of way may miss?
Yeah, so the far and above the biggest mistake that we probably correct this on every customer we pick up is just not accounting for inventory and cost of goods sold properly. So from a tax standpoint, you can get away with just expensing every single purchase you make throughout the year, and then having your CPA go back maybe once, maybe twice a year and trying to reverse back out any inventory that might still be sitting in your garage or an FBA or in a warehouse somewhere. And again, from a tax compliance standpoint, this isn't terrible. From a CFO's perspective, where you actually want to steer the profitability of your company, this is terrible because it doesn't match those actual expenses with the sales. So when you hear this, term accrual accounting, really all that means is, can we match our expenses with the actual sales so that we know, did this product make me money or did it not make me money? And so I would say that's issue number one is.
I'm gonna try to be
Yeah.
like the common folk who doesn't understand all the technical stuff, and then you can tell me if I'm right. Essentially, what you're saying is like, it's really easy if I have an ASIN, I'm ordering that ASIN from China, I have direct cost to that product. I ordered a sample of that product. I had to ship that product to me. But then you have other costs like maybe like your bond insurance, which is spread across all of your products. So if you have 5 products and it's $250, it's not all towards one product, it's spread across all 5. And so being able to categorize your expenses as directly related to an ASIN or not directly related to an ASIN helps you understand ASIN profitability, which is the big thing you and I looked at. My Amazon account was profitable, but I had
Right.
ASINs that were not profitable.
Yeah, you nailed it there. So you really you want to do what you're talking about is kind of a unit analysis, an average sale of this particular SKU, this particular ASIN. I'm going to have a sale price. I'm going to have an average amount of rebates and returns. And then you're going to look at your Amazon commissions, your FBA fees. And then you really got to take a close look at your advertising expenses, not necessarily just your cost, but how much advertising you have to spend to get your total amount of sales. And you end up building yourself kind of an average picture, like you just said, Jeff, of, okay, on average, if I sell 1 unit of this ASIN, I either make a few bucks or I lose a few bucks. And I think you're right. A lot of sellers are surprised when you do that level of analysis to learn, oh crud, 2/3 of my ASINs are losers. I thought I was making money on a bunch of these, but it turns out that just a few of these products are actually the ones that are paying my salary. Everything else is costing me money.
Now, the value of this, right? Because the value of this is all the things that we talk about, which is like when you go to spend your effort on building a new listing, bringing in a new product, you want to focus on your most profitable SKUs. They might not be your highest selling volume SKU, may not be your highest profitable SKU. So this is really like thinking of Amazon selling in a different way. You may have heard of this from like the concept of profit first, or there's other methodologies that are out there, but something that we all kind of push on and should be pushing on more is like, do you actually know how profitable each of your SKUs are? So that seems to be one of the common mistakes. So, okay. I don't want to hire somebody like yourself. What are the things that I need to be thinking about if I'm trying to do this myself? Like, I know you use, like for my account, we use A to X. We used to use QuickBooks. There's a lot of information that comes back and forth from Amazon. Do I have to hire somebody? I mean, you're not a CPA,
Right.
but you've really dug into this from the Amazon side. So like, do I have to hire somebody to do this, or is there a higher level of this that I can be doing on my own?
Yeah, I would definitely say, we still use QuickBooks Online. Jeff, for your account, we've layered on A2X. So if you were to Google A2X accounting, pretty good piece of software. And we use those two pieces of software together to gather the numbers from Amazon and ultimately kind of attach them to the bank account, right? So that kind of put a name on every dollar to kind of make it simple. And so I would say if you're going to do it yourself, which by the way, I think you shouldn't be spending money on a guy like me when you're hot off the block. You're just getting your business started. You don't have a lot of cash flow. Maybe I would say maybe 0 to 20,000 or so a month in revenue. Yeah, it's kind of a toss-up as to whether you should hire someone or outsource someone to do this bookkeeping. Because if you set up QuickBooks Online correctly, you set up a tool like A2X that can really automate a lot of the Amazon fee calculations and reconciliations, which those are just big words for know where your money is going.
Yeah, that was the big thing with you and I, right? Like I was pulling everything into QuickBooks, but when you connected it to A2X, it was able to line item a lot more of the Amazon charges down to the ASIN. So we had much better ASIN profitability because there was a lot of kind of clumped together costs that we didn't know exactly which ASIN it should or shouldn't be going to.
And this kind of goes to, you're talking about mistakes that sellers make, but the easiest and most wrong way to do accounting is to let your bank account show you a deposit. Let's say the deposit's for $1,000. You just hit add. That $1,000 equals sales. That's
okay.
wrong.
Well, I'm guilty. That's, I think, how I did it before I hired the bookkeeper. So, yeah.
But you and I know this, Jeff. But like, what's baked into that $1,000 deposit is $5,000 worth of sales.
Right.
And
so let me ask this: is it too late if I've been doing it on my own and I've screwed all these things up? Is it too late to bring somebody else on to kind of help fix it?
No, it isn't at all. And you mentioned this earlier. It is helpful finding an accounting firm that really understands e-commerce, mainly because there's some complexity that goes into which fees kind of should go where. But no, it's not too late. The great thing about QuickBooks Online is that you really can't screw anything up that couldn't be fixed with the right professional in there. And frankly, you might be able to do some of yourself. I mean, a lot of it's just undo that click that you hit add and go back and actually split that transaction up to capture each of those numbers coming out of Amazon.
So if I'm under 20,000 a month, I'm still doing my my bookkeeping myself. Maybe as I'm getting closer between 10 and 20,000, I'm starting to look for a service. Essentially, there's plenty of ways to do it myself. I may not want to create the A2X connector, just kind of put it in. But what I want to do is try to get as much line item cost as possible, right? Like if I'm getting a purchase order from a manufacturer and they're making 3 different products, I want to make sure that I can line item as much of the cost as possible. Even if I kind of cheat and I batch it in QuickBooks to where I get to 10,000, then I have you fix it all for me. At least if it's there in the invoices, it's something that can be figured out at a later point in time.
I agree. Yeah, I totally agree with that. I think, and by the way, people that are really great at doing this accounting, and I think Seller Accountant, we're pretty good at it. Nobody goes, this is like this myth out there. Nobody goes and gets every single unit and knows exactly how many pennies in freight forwarding and in storage are attached to the unit. That just doesn't happen. What you end up doing is, instead of hitting the expense button right away. You put it all into a number of inventory accounts. And then, Jeff, you and I had to do this also. You have to kind of estimate. You use your information that's available to say, you know what, this unit cost me $5.04. But then there was that kind of bond insurance that was over this entire batch.
Right.
There's a palleting fee.
Right.
What makes sense here is to take that whole thing, divide it by the load, which was 1,000 units. And so all that say, you can come up with an average cost per unit and get a really good picture of your accounting. You don't have to, you could spend a full-time job trying to figure out exactly how much.
Yeah, it's about having a general sense of whether something's profitable or not. It's not a nickel and dime. So one of the things I know you kind of have specialized in, I think you kind of did this inadvertently, was kind of like helping people look at their business to determine whether their business can be sold or what it could be sold for.
Mm-hmm.
Are there certain things that when you're looking at that you find people missing? They come to you believing they have a certain level of profitability.
Mm-hmm.
You kind of look at them, trying to help them evaluate whether they should sell their business, how much they should sell their business for.
Mm-hmm.
What are they missing when they're looking at that profitability that maybe, are things that can help others?
Yeah, it's a good question. Well, so you're right. This was an accident. I sold a business that I started last year, had a good run with a healthcare company, sold my piece of it. And as a result, that was just a part of this industry that I knew the most about, was kind of mergers and acquisitions. And so we've had the opportunity to help a lot of sellers kind of prepare for sale. And, what people have to understand is this thing called buyer psychology. You got to understand what your investor is going to be looking for someday when you decide to sell your business. And what you have to realize is that it is not black and white. There is an emotional element to this. And so anything you can do to create trust in your financials, literally don't lie about your numbers. Make sure you've got them all captured. Make sure you do everything you can to be consistent in your accounting, where you're not classifying it as cost of goods sold one month and then as research the next month. Make sure you're consistent, because at the end of the day, that investor is going to be looking at your package. They're going to see, do I trust Jeff? Do I trust Jeff? Do I believe that Jeff's the guy that's going to lie to me? And now I'm going to look at the numbers and say, based on the fact that, Jeff's a trustworthy guy, I'm going to be willing to give him a higher multiple for his business. And then there's obviously math that goes into, are you profitable? What is your discretionary earnings for your
what
business?
are people, when people come to you and they believe they're at a certain level of profitability and they're not, what are the big things that you kind of find, or what are you seeing today that people need to be thinking about, because of changes that Amazon's making in their feeds or something like that?
Yeah, so it's something just like real practical that I saw this week is a seller that's growing really, really quickly and didn't understand the impact of returns on their business. So everybody knows this, by the way. You have an item returned, somebody doesn't like it. Pretty often, Amazon will just put that right back into inventory. You get to sell the same widget again next week, and you feel like you're fine. The problem is that the sellers don't realize Amazon doesn't refund all of those fees they charged you, right? You sold the item the first time, you paid a commission, maybe it's 15%, you paid an FBA fulfillment fee that might have been 25%. Well, guess what? Amazon keeps the entire 25% FBA fee, and they keep a portion of the commission. So when you turn around to try to sell that widget a second time, you're kind of already in the red a little bit. You've already spent some amount of money before you even start again. And so I had a customer recently that was shocked to realize on about $100 item that when that item was returned back into inventory, they actually, Amazon got to keep about $28, and that's not even including advertising expense. And so I think understanding, like you were saying earlier, Jeff, on a SKU basis, on an ASIN level,
so all of us think about a return and think, okay, the customer sent back the return, I'm getting my money back from Amazon. What you're saying is that what you're seeing is about 72% of that total fee is getting returned back to me, and about 25 to 28% Amazon gets to keep, because they actually fulfilled that product. It makes a little bit of sense, right? They actually fulfilled the product. They actually had the product returned back to them. And yes, you get a chance to resell it to recuperate some of your costs, but you pay all those fees again.
Mm-hmm.
And I think that's where you just have to analyze, like, is it unfulfillable? Should you just dump the inventory? Should you try to resell it? It just leads to a whole bunch of other conversations. Well, I appreciate you coming on and talking a little bit about profitability. We could talk about this for a long time. There's a lot of little nuances to get into. We did create a 5-part series on profitability. So if you check below in the links, you'll see the links to the articles that we have where we have some additional information from Tyler. And we'll definitely bring you back on to talk about some things in the future. So thank you for joining us. Can you tell everybody how can they find you if they want to reach out to you directly?
Sure. Yeah. And thanks, Jeff, for having me. Selleraccountant.com is our website. And you can literally, if you're interested, you can email me directly, tyler@selleraccountant.com. But yeah, Jeff, always great talking to you. Thanks for having me.
Yeah. And I think, to wrap it up, just remember profitability is what's going to make or break you. And so you need to be looking at things not just at the top level of sales numbers, but how much profit is actually being driven down to your business. So until next time.